Good evening, friends. Today we are going to talk about set off and carry forward of losses under direct taxes. So the sections which are pertinent to this study are Section 70 to Section 80 of Income Tax Act 1961. So before I step into what we understand by the term set off and carry forward of losses, let me give some examples and then it will be easy for us to navigate ahead. Okay. Okay, assuming there is a Mr. A and he has two house properties A and B, and one is self-occupied and one is let out. And from the self-occupied house property, as I already told, that there can be a chance for making loss, and then assuming that there is a loss to the tune of rupees 1.5 lakhs for the financial year 2019-20. And the other house is being let out, and from the let out house property there is an income of some 6 lakh rupees. Now this is a loss from the same source, and this is a profit or income from the same source, that is the house property. So this falls under the category of intra-head, within the same head or same source of income. Under one source, uh, there is a loss, and at the same time, in the same financial year, assuming that there is a profit under the same source of income. So under the intra-head adjustment, loss of loss of loss from one source can be set off against profit or gain from or income from the same source. So in this case, the loss of 1,50,000 rupees can be set off against 6 lakh rupees of income. That is 6 lakhs minus 1.5 lakhs is equal to 4.5 lakhs. So this is the income from the house property after making adjustments under intra-head adjustment or within the same source adjustment. Hope you have understood it. Next one. I will give you similar example, uh, and then I hope the concept will be loud and clear. Now, assuming that Mr. A is there and he's doing two businesses, and all these two businesses are non-speculative business, and the businesses are X and Y. That is, you can take a stationery shop or a medical shop, and the second one is a stationery shop. Now, from the medical shop, there is a profit of rupees 15 lakhs for the financial year 1920. And whereas in case of a stationery business which is carrying out, there is a loss to the tune of 5 lakh rupees. Loss of 5 lakh rupees. So, under intra-head adjustments means from the same source or within the same source. For example, this is a loss, this is a profit from business, this is a loss from business. So it's an intra-head within the same head. So profit from business, loss from business. According to intra-head adjustments, loss of the business loss can be set off against business profit. In this case, the loss of 5 lakh rupees can be adjusted against or set off against 15 lakh rupees. So 15 lakhs minus 5 lakhs is equal to 10 lakhs, and income from business or profits or gains from business is 10 lakh rupees, and he has to pay tax on this particular amount. Next one, another example, the third example in this case is, for example, Mr. A is there and he has sold his house property A and sold house property B during the financial year. During the financial year. Now, Mr. A is there, he has property X, house property X and house property Y, for example. And there was a transaction wherein he sold the house property X and house property Y in the year 1920. And after computation of capital gains, it is found that property X there was a profit of some 15 lakh rupees, 15 lakh rupees, and property Y there is a loss of some 12 lakh rupees or 20 lakh rupees, whatever can be the example. Loss. This is a loss. So in the first case there is a profit. In the second case there is a loss. Now this profit and loss are under the in same head, that is capital gains, and the capital gain in this particular example is long-term capital gain. Now this loss of uh, this loss from long-term capital sale of asset can be set off against long-term capital gain from the sale of asset. So you should set off 50 lakh against 50 lakh rupees of long-term capital gain, your long-term capital loss to the tune of 12 lakh rupees in this case. So eventually you have to pay whatever is the long-term capital gain tax on 3 lakh rupees and not on this one. So hope you have understood the intra-head adjustment under the same head of income, under the same head of income. So with these three examples, I hope you have understood the concept what we are discussing. The second concept what we will be discussing at length as far as this particular topic is concerned, I will explain it with a set of examples. Let's see one by one. The first example is, now that assuming that Mr. A is there and he's an assessee, and he has done some transactions in the previous year. The transactions are as follows. He has a house property A and house property B. Now, the first house property, there is a loss of 2 lakh rupees because it is self-occupied and he has paid a interest on his self-occupied house property, interest on loan borrowed for the purpose of construction or acquisition or purchase of house property. And on the second house property, he has let out this house property, and he has let out and there is a income, and the income from the house property is rupees 60,000. Number two, number one, number two, number three. He has done some business in the last year, and this business is continued business, and there is a non-speculative business profit of rupees 5 lakhs. Let's see now what should be done as far as these transactions 1, 2, and 3 is concerned. So let's look one by one. The first one is, as already told, that there is a intra-head adjustments which is possible in this case. Means in this case, if you observe, there is a house property income and at the same time there is a house property loss. Under the intra-head adjustment, the house property loss of 2 lakh rupees can be set off against the house property income of 60,000 rupees. But the 60,000 rupees is not fully able to set off the loss which is to the tune of 2 lakh rupees. So in this case, the loss of 2 lakh rupees cannot be set off against the profit of 60,000 rupees. So we will be able to set off to the tune of only 60,000 rupees. So first step is over. So which is intra-head adjustments. Now second step is still there is a loss from house property which could not be set off because of the given reason. The loss from a house property is 2 lakh 1,40,000 rupees after you deduct 60,000 rupees from this. Now this loss from the house property according to inter-source adjustment means that this loss from the house property can be set off against any other income, but not from the same source. So here there is a business profit. Now, according to the inter-head adjustment, this is now there is a scope for inter-head adjustment. Inter-head adjustment means adjustment of loss against adjustment of loss of one income against profit or gains or income from other source of income, other types of incomes. So in this case, this is a house property loss and this is a business profit. So inter head adjustments means within different there are different sources of income, and one loss of loss from one type of income can be set off against profit from other type of income. So in this case, if rules permit, this loss income tax rules permit, the loss from house property can be set off against business income, profits or gains. So in this case, if you look at the rules, and the rule says that under interhead adjustments, a loss of 40,000 can be set off against the profit. Sorry, 1,40,000 can be set off against a profit of 5 lakh rupees. So 5 lakhs minus 1,40,000. So eventually, the income to the assessee for the financial year 2019-20 could be 3,60,000 rupees. So this is the meaning of the concept inter-head adjustments. Inter-head adjustments simply means that loss from an in, from an from one head of income can be loss from one head of income can be set off against incomes or gains or profits from other source of income. Okay, hope you have understood it. Now, next concept under this particular topic is carry forward of losses. Carry forward of losses. Now, what do you mean by carry forward of losses? Carry forward of losses means, let me give a small example and or examples, and hope you will understand from those examples very lucidly and clearly. So here let's take a small example. The example goes like this. Mr. A is there. Now A has a house property income. He has two house properties, A and B. Okay, from this house property, there is a loss of 2 lakh rupees because it is self-occupied, and this on this the interest what he has paid for the acquisition or construction of house property to the banker in the financial year 2019-20 in the given example is 2 lakh rupees. The second house property is been let out, and he has sustained a sorry, he has made a income from the house property by letting out some 1 lakh rupees. Some 1 lakh rupees. There are no other transactions of Mr. E for the financial year 2019-20. Now, under intra-head adjustments, within the same source of income, this loss of 2 lakh rupees can be set off against income from similar source of income. So in this case, the loss of 2 lakhs can be set off against the income from house property B of 1 lakh rupees. So let's set off it. So 1 lakh rupees, can I deduct? This is the profit. Can I deduct the whole amount? No, it's not possible because the loss is very high. or more in comparison with the profit. So I can only set off loss to the tune or extent of only 1 lakh rupees. So how much is set off? 1 lakh rupees is set off. How much is still not not able to set off? Not able to set off is another 1 lakh rupees. Can I set off this year now? No, because there is no inter-head adjustment possible because the assessee has only two transactions, that is two incomes under the same head. So the income tax provisions or the concept of set off and carry forward losses states that this loss of 1 lakh rupees, this loss of 1 lakh rupees which you could not set off this year because of the given situation can be carry forward and set off against profit, against, you can set off this 1 lakh rupees against profit of income from house property, if at all, if it is there. Now for example, so in this case, as already told, there was a loss of 1 lakh rupees which could not be set off this year because of the given circumstances and situation. Now this loss could be carried forward, can be carried forward for certain assessment years, which will be specified in the next slide. This loss can be carried forward to next year, for example 2020-21, and can be set off from similar income under the head income from house property. And assuming that this assessee A has an income from the uh, house property, for example 4 lakh rupees. Now, this loss of the last year of similar kind of income source can be set off against this particular loss, this particular gain from a similar income. So 4 lakhs minus carry forward loss of 1 lakh rupees can be set off. This is a loss, this is the income. So this one for against this 4 lakh rupees of income, 1 lakh rupees can be set off, which is a loss of the last year, or which is carried forward in to the next year. So next year the income is only 3 lakh rupees. That is the meaning of the word carry forward of losses. Hope you have understood it. So in this particular topic, we are going to talk about comprehensively step 1, step 2, and step 3. So you have to follow the steps as it is. Step 1 followed by step 2 and followed by step 3, followed by step 3. Now what is step 1? Step 1 is within the same source of income adjustment, that is intra-head intra-head adjustment. So I gave you the example also. Number 1. Number 2 is step 2 is you have to go for after you have completed intra-head adjustment, and its loss is still but is there. That loss can be set off against different source of income with some exceptions and conditions by the rules under inter-head adjustment. I gave you the examples also. And still if the loss is still existing and it could not be set off, or it cannot be set off, then it can be carry forward for the next year and can be set off under similar source of income. So step number 3 is carry forward of losses and set off under similar source of income. So step 1, step 2, and step 3. Now I told you about the third step, which is carry forward of losses, which is carry forward of losses. Now carry forward of losses, this particular slide, it tells you how many assessment years this loss can be carry forward. Okay, let's pay attention. So a house property loss can be set off against the similar source of income, that is income from house property, and this house property loss can be set off and carry forward. This house property loss can be carry forward. Our main discussion as far as this particular slide is concerned is how many years it can be carried forward. How many years this loss can be carried forward. The house property loss can be carried forward for 8 assessment years. 8 assessment years, and it can be set off in the 8 assessment years under similar source of income, that is income from house property. Under income from house property. Under income from house property. Number one. Number two, uh, when there is a normal business and which is non-speculative, we call it non-speculative business, non-speculative business. If there is a loss which cannot be set off due to inter-head adjustments or intra-head adjustments and forced to be carried forward in the next assessment years, this normal business loss can be carried forward for 8 assessment years till it is fully set off, and this loss can be set off in the next years under carry forward of losses, and it can be set off against only and only under the head of income under the heading profits or gains from business or profession. So this is point number 2. Point number 3 states that speculative business loss, if any, which could not be set off this year, can be carried forward for 4 assessment years, and it can be set off against any speculative business income only, any speculative business only. So please remember, this is 8 years. House property loss can be carried forward for 8 assessment years. Normal business loss can be set off and carried forward for 8 consecutive years, 8 assessment years. Non-speculative business, sorry, speculative business loss can be carried forward for only 4 years. Next one is specified business laws. There are some specified businesses which are done, which are specified under Income Tax Act, and they enjoy some privileges. And if at all these specified losses which are specified under Income Tax Act sustain some losses in a previous year, then they can be carried forward and set off in the subsequent assessment years, and that to indefinite period of time till all the losses are set off. And this loss can be set off against similar type of specified business profit, that is the same source. Next one. This is the fourth one, and this is the fifth one. If there is a long-term capital asset transaction, and from the sale of the long-term capital asset, if there is a long-term capital loss, please remember this loss can be carried forward till it is set off for 8 assessment years, and this loss of long-term capital gain loss should be set off against long-term capital gains only, against long-term capital gains only. This is the fifth. Sixth one, short-term capital gain loss from the sale of short-term capital asset can be carried forward for 8 assessment years and be set off, and the set off can be done against STCG or LTCG. STCG, that is short-term capital gain or long-term capital gain. Fifth, last one. One, two, three, four, five, six, and the last one. So if somebody is owning and maintaining horse races and there is a loss from such an activity, if there is a loss from the activity of owning and maintaining of horse races, this loss, for example, 5 lakh rupees can, if there is a loss, this can be carried forward for 4 assessment years, and it can be set off under the similar source of income, that is income from activity of owning and maintaining of horse races. Now, hope you have understood it. I will give a small example of this and then you will understand it. Okay. Now, let me give a small example of carry forward of losses, and hope with this example you will be able to clear any doubts what you are having. Let's take the example of the last one, which is I'm talking about uh, This particular one, loss from the activity of owning and maintaining of horse races, which can be carried forward for 4 assessment years. Let's give a small example, numerical example. Now, Mr. A is there and he has a business activity which is owning and maintaining of horse races. And in the year 2019-20, unfortunately, this particular assessee from this kind of business has sustained a loss of 20 lakh rupees because of some unforeseen circumstances and due to adverse business conditions. This particular assessee has sustained a loss of 20 lakh rupees from the activity of of maintaining and owning and maintaining of horses. So this year he could not set off this loss because there was only one transaction of loss. Now this set off and carry forward of losses states that loss can be carried forward for 4 years. For example, in this case it is 2020-21. It can be carried forward 21-22, 22-23, 22-23, sorry, and 23-24. So during these 4 years, if there is a income from similar activity, then this loss of 20 lakhs rupees can be set off against this one. For example, in 2021 he made a profit of 5 lakhs. In 21-22 he made a profit of some 6 lakh rupees, and in 22-23 he made a profit of some 7 lakh rupees from the business of business activity of owning and maintaining of horse races, and in 23-24 he made a profit of 1 lakh rupees. So in this 20 lakh rupees can be set off. For example, in this case 5 lakh rupees was the profit. This can be set off. Out of this 20 lakh, 5 lakhs can be set off. So set off. So in that year the income is zero, assuming that there are no other source of income. Now the balance is 15 lakh rupees. Now in the subsequent year, he made a profit of 6 lakh rupees from similar kind of business. So out of this 15 lakhs, 6 lakhs is set off and carry forward and set off. So now in this year there is no income and no tax. Now how much is left out? Now 9 lakhs. In the third year, he had made a profit of 7 lakhs rupees, and then this 7 lakh rupees out of this now till so far we have set off out of 20 lakh rupees 11 lakhs still to be set off for another 2 years is 9 lakh rupees. Hope you have understood it. Now in this year the profit was 7 lakh rupees. Out of this 9 lakh rupees, 7 lakhs can be set off, and hence because of this reason the 7 lakh was the income and the set off amount is 7 lakhs, and there is nil income. So how much was still uh, which was not set off first 2 lakh rupees from the original 20 lakh rupees. So in the fourth year he made a profit of 1 lakh from similar kind of business. So now there is an income of 1 lakh rupees. So this 1 lakh rupees can be set off against this one. So 1 lakh is set off. So still how much is the income? Out of 2 lakhs, 1 lakh is set off. So 1 lakh is the income of the that particular financial year. So this 1 lakh is the income for this assessee, and he has to pay tax according to the slabs mentioned under Income Tax Act 2019-20, whatever are the slabs prescribed. Hope you have understood it. Now, so set off of losses are under two heads. That is intra-head. Intra-head means intra-head means same source of income, same source of income, and inter-head same source of income, and interhead means different source of income, different source of income. Now I will give a small example. Same source of income, house property profit and house property loss. Similar source of income, business profit and business loss. Capital, long-term capital gain and long-term capital loss. Short-term capital gain and short-term capital loss. No salary loss but salary income. Uh, Another one is speculative business profit and speculative business loss. Non-speculative business profit, non-speculative business loss, so on and so similar sources of income. Whereas when I am talking about inter-head adjustments, house property loss with business profit, house property loss with business profit, house property loss was with salary income. So these are different sources. So loss is from one source and income will be from other source. This loss can be set off against this other source of income, which are not under the same source of income. So, but there are some exceptions under intra-head adjustments, and some exceptions are there under inter-source adjustment. So let's look at one by one, and they are very, very important. So there are some exceptions. There are some exceptions, and let's look at the exceptions. So hope you have understood the introductory part of our discussion related to set off and carry forward losses under the three different headings: inter-source adjustments, in intra-head adjustments, sorry, and inter-head adjustments, and carry forward of losses. So I told you there are certain exceptions under intra-head adjustments. Let's see one by one. The first one is the first exception is speculative business loss. Speculative business loss. There are three types of businesses which can be mentioned under this particular topic. So these are one, two, three: speculative business, speculative business, non-speculative business, and last one is specified business. Last one is specified business. Okay, now specified business means these are the businesses which are mentioned under the Income Tax Act 1961, and they enjoy some privileges as far as income tax rebates and holidays are concerned. So we'll talk elaborately when we talk about profits or gains from business or profession. Let's talk about these two now. Non-speculative business. Non-speculative business is a normal business. I will call it a normal business where it can be a trading, it can be a commerce, it can be uh, it can be mm, manufacturing activity and similar kind of activities where there is no scope for speculation. Whereas speculative business is there is no exchange of goods. There is no exchange of goods between the buyer and seller. There is a transaction without buying and selling of without delivery of goods between the buyer and seller, and there is a profit or loss from this kind of transaction. So these transactions are called as speculative business losses or speculative business profits, if at all if there is a profit. Now, the first exception under intra-head adjustment. Now, what do you mean by exception? Now, you can have an element of doubt that what do you mean by an exception? Exception means that, for example, I told you when I gave the example which I gave you under inter-head adjustment was like house property income and house property loss. So there is no exception as far as this case is concerned. You are given all the liberty to set off this loss against this income. But there are some exceptions under intra-head adjustments. Now, the first particular exception is speculative business loss cannot be set off against normal business income. So, so please pay attention. It's very, very important. The point what I am trying to uh, explain is any speculative business loss is there. So that can't be set off against normal business income. So let's take a small example. Mr. A is there. Mr. A is there and he's doing business, and he's doing two types of business. One is normal business, which is called as non-speculative business, and he is doing even a speculative business. And this is a continuous business, I will say, and this is a intermittent business, which is not occurring daily, whereas this is a business which is daily conducted. So in this case, uh, this guy from a normal business, and the normal business, for example, is a chemical business, he made a profit sum of 50 lakh rupees, number one. Number two is, so please remember, this is a same source of income. So we are discussing about intra-head adjustments. Intra-head means within the same source, business and business. So speculative business. So he was also having that tendency of doing stock market operations. He invested into stock markets, and on one fine morning, he did something called as intraday. Intraday, there is something called as intraday transactions in stock markets, and morning is sold. For example, he went into stock market. He went to his broker and purchased Infosys 1,000 shares in the morning, and in the evening he sold the same shares of 1,000 quantity. And in this process, he made a loss of some 10 lakh rupees. This is, now he has not taken the delivery of these 1,000 shares, and hence it is, as I already told you, if there is no exchange of goods between the buyer and seller, there is no delivery of goods, then that results to a speculative business. And in this transaction, he made a loss, and a huge amount of loss was incurred by him on that day, and it was 10 lakh rupees. Now, so from the chemical business, he made a profit of 50 lakhs. From speculative business, as given in the example, he sustained a loss of 10 lakh rupees. In the chemical business, he made a profit of 50 lakh rupees. In the speculative business of shares, he lost some 10 lakh rupees. Now, what the rule says that, the speculative business loss cannot be set off against normal business. This speculative business loss of 10 lakh rupees cannot be set off against this particular uh, non-speculative or normal business income. Number one. Number two, the speculative business loss can be set off against speculative business profit only. What does it mean? Now, assuming that there is one more transaction on a other day, wherein this guy again went into stock market to the broker, and he purchased 2,000 shares of Infosys and in the morning, and sold 2,000 shares of Infosys in the evening. Thereby he made a profit of 5 lakh rupees in the in the same financial year. So there were two transactions. One transaction he made a loss of 10 lakh rupees. In the other transaction he made a loss of 5 lakh rupees. So this loss of 10 lakh rupees can be set off against a speculative business income of 5 lakh rupees. That is the meaning of this particular sentence. So the summary of this discussion is, speculative business loss can be set off against speculative business income or profit only. Number one. Number two, speculative business loss cannot be set off against any other source of income than that of speculative business profit or gain or income only. Hope you have understood it. Next one. So the second exception to intra-head adjustment or inter-source adjustment. Inter-source means within the same source. Particular uh, second particular exception is, let's discuss the second uh, exception. The second exception states that loss of specified business. So as I already told to you, this particular particular topic will be comprehensively discussed and explained by me, and I will upload the video on this when we are discussing the third source of income, that is income from profits or gains from business or profession. At that time, I will be elaborately speaking. Just remember that there is a topic called as specified business. These specified businesses are businesses which are specified under Income Tax Act 1961-62, and they enjoy some privileges as already discussed as far as tax rebates or concessions or holidays are concerned. So loss of specified business cannot be set off against normal or speculative business. So, for example, there is a loss from specified business of 50 lakh rupees, number one. At the same time, in the same financial year, by the same assessee, there is a normal business profit of 5 lakh rupees, and from speculative business profit or gain or income of 10 lakh rupees. What this particular exception states that this loss from specified business cannot be set off against this income or this income which is non-speculative business income or non-speculative business speculative business profits. This can be set off against any other specified business profit only. For example, now assuming that this guy is again doing another type of specified business in the financial year, and thereby he had uh, he had this was a loss, and the other specified business was different, and he made a profit of 20 lakhs in that case. So this loss is 50 lakh rupees from non from specified business. This profit or income is 20 lakh rupees from other specified businesses. So this specified loss can be set off against income of a specified business only or profit of a specified business only, and you can't touch normal speculative, you can't set off against normal or speculative business profits or gains or income. So normal business loss can be set off against, whereas okay, loss of specified business can be set off against income of specified business only. Number two. So that is what you have discussed. The most important point, the note is given to you. Normal business losses can be set off against specified business income. So this is a very important point. If there is a normal business and there is a normal business and he had made a loss of some 50 lakh rupees, and at the same time, he has a specified business. In the specified business, there was a profit of 10 lakh rupees. So this normal business, where if there is a loss, this can be set off against speculative business loss as well as non-speculative business loss. There is a as well as specified business income also. So normal business loss can be set off against business loss can be set off against normal business incomes or gains or profits, or speculative business incomes or profits or gains, as well as specified business incomes, gains or profits. Hope you have understood and things are clear. See, this particular chapter is little bit confusing, and you have to keep on reading at least 5-6 times till the concepts and the rules and regulations are clear. And these are all the incomes, the rules which are framed under Income Tax Act, and you have to use as it is. You can't modify, and you can use at your own whims and fancies. Now, the third exception is loss from the activity of owning and maintaining of horse races. The loss from the activity of owning and maintaining of horse races can be set off only against income from activity of owning and maintaining of horse races, and you can't go to any other head of income. Hope you have understood. For example, Mr. A is there. He has X, Y, Z. These are the places: Mumbai, Kolkata, and Hyderabad. And here he has a business of owning and maintaining of horse races, owning and maintaining of horse races. In this case, in the first case, which is Bombay 2019-20, Bombay, this particular business of owning and maintaining of horse races has generated a profit of 50 lakh rupees. And in Kolkata, there was lack of demand and the loss was 20 lakhs from similar kind of business. In Hyderabad, there was a profit of 25 lakh rupees. Now, the total profit is 75 lakh rupees and the loss is from the similar kind of business is 20 lakh rupees. Now, this provision says that the loss from this activity of maintaining and owning of horse races can be set off against similar source of income, that is income from activity of owning and maintaining a horse races. So this 20 lakh loss can be set off against 75 lakhs and the assessee income is 55 lakh rupees and on this he has to pay income tax. The fourth exception under the head intra-head adjustment or within the source of income adjustments. Let's look what is that. This is a long-term capital gain loss. This is a case of long-term capital gain loss. Please remember, long-term capital gain is taxed at the rate of 25 percentage, sorry, 20 percentage, and short-term capital gain is taxed at a rate of 15 percentage. This was discussed this will be discussed under the fourth chapter, which is capital gains. So I will be preparing a separate video for this particular chapter, and you can get a overview about the taxation, the meaning and the other intricacies of long capital gains, short-term capital asset, long-term capital asset, long-term capital gain, short-term capital gain, and the rate of taxation. So at that time we will discuss about that tax quantum on long-term capital gain and short-term capital gain. So here let's discuss the given background: long-term capital loss, where to set off and how to set off. Please remember, long-term capital loss can be set off against long-term capital gain only and not against similar source of income, that is short-term capital gain. So for example, uh, Mr. A had three transactions. One is house property 1, house property 2, and sale of shares. Sale of shares. Now, this house property was bought some 20 years back, and this year he sold and he made a profit of some 50 lakh rupees. Similarly, this second house property was purchased some 20 years back, and he made a profit, a loss of some 20 lakh rupees. And so this is long-term capital loss, this is long-term capital, sorry, this is long-term capital gain, and this is long-term capital loss. And he sold some shares, and within 3 months of acquisition he sold, and he made a profit of for example 15 lakh rupees. So please remember, loss is sold in brackets, profit is open, and this is also a positive one. When I'm keeping in bracket, it means negative, so there is a loss. So now look at this. The long term capital loss, which is 20 lakh rupees, can be set off against long term capital gain only. So this loss can be set off against this one and not this one. For example, so in this case 20 lakhs can be set off against 50 lakh of long term capital gain, and the long term capital gain balance will be 30 lakh rupees, and other short term capital gain will be 15 lakh rupees. Now another example, assuming this is 60 lakhs. One house property is sold at 50 lakhs profit, long-term capital gain. The other house property is sold and has sustained a long-term capital loss of 60 lakh rupees, and sold shares, and thereby he made a short-term capital gain of 15 lakh rupees. Now this 50 lakh rupees can be used to set off the 60 lakh rupees, but this can't be fully absorbed. So in this case, still unabsorbed loss, long-term capital loss is 10 lakh rupees. So now let's come to this point. Can I set off this 10 lakh rupees against 15 lakh rupees profit? No, because the taxation part of long-term capital gain is 20%. The taxation of short-term capital gain is 15%. That's the reason why long-term capital loss cannot be set off against short-term capital gain. Whereas short-term capital gain be set off against both long-term as well as short-term. Please look at this point. Hope you have understood. So let's summarize as far as this topic is concerned and the fourth exception is concerned, which is very important. Long-term capital loss can be set off against long-term capital loss can be set off against long-term capital gain only, and you can't set off against, you are not allowed to set off against short-term capital gain. Whereas short-term capital gain can be set off against long short-term capital gain first as well as short-term capital gain, and hope you have understood it. Next one. The next exceptions under intra-head adjustments are within the same source adjustment is the same source of is loss from lottery and puzzle and crossword puzzles and card games. There can be loss from card games by because you are betting. You are this one also you are betting. Puzzles you are also playing, and there can be a loss. For example, lottery. What is the loss? You purchased the lottery for 10,000 rupees, and the outcome was you lost it. You could not gain a single prize, so there is a loss. This is loss from, please remember, this is loss from income from other sources. The last topic, income from other sources, there can be a loss also. Puzzles. So for participating in puzzle solving or competition, you paid some 20,000 rupees and you could not win a single prize and you lost the entire amount. Card games. You participated in card games because you are a club member, you lost 20,000 rupees. So we are talking about those losses under these heads, and this that is loss from lottery, puzzles, card games, etc. Okay, similar types of losses like betting. Okay, so no set off against any income. No set off against any income. Expenditure incurred for buying bet expenditure, it is taxable at the rate of 30 percentage. Expenditure incurred for buying lottery, not expenditure incurred for buying lottery ticket, not deductible. Okay, now what is this 30 percentage? Uh, for example for example, you purchase a lottery, you have purchased a lottery, and the after you purchased, you came to know that this lottery was nominated and you won some 1,50,000 rupees. Now this 1,50,000 rupees is going to be taxed at a rate of 30 percentage, which is like 45,000 will be deducted as tax deduction at source on winnings from lotteries, puzzles, or card games. And after deducting this 45,000 rupees, 1,05,000 rupees will be given as a winning. So loss from lottery, puzzles, and card games, etc., or similar kind of winnings or winnings from similar nature, no set off against any income. So hope you have understood it. The sixth exemption under intra-head adjustments or similar source of income adjustments are loss from exempt source cannot be set off against profits from taxable source of income. So what does it mean? If there is if there is an income which is exempted from taxation, loss from exempt source cannot be set off against profits from taxable sources of income. So let's talk about intra-head adjustments. Uh, further ahead and let's understand comprehensively. So, what intra-head adjustments are telling? These intra-head adjustments are telling a few important things to us, and let's see those important things. Loss from one house property, loss from one house property can be set off against from one house property. Already I told, if there are two house properties A and B, this is a there is a loss of 2 lakh rupees from the first house property, and there is a profit of 6 lakh rupees from the second house property, and this profit or losses are from similar businesses which are house property. So this loss of house property 1 can be set off against profit of the second house property under intra head adjustments or within the sum source of adjustment. Next one. Next one is the second one, and the second one states that uh, loss from a speculative business, non-speculative or regular business can be set off against can be set off against profit from non-speculative or please remember non-speculative is also called as normal business. So for example, Mr. A is doing a business of chemicals and he made a loss because of the market condition, some 10 lakh rupees. And at the same time, he was doing a business of even selling and buying of laptops, trading into laptops, and he made a profit of some 20 lakh rupees. So the loss from one speculative business or regular business can be set off against profit from similar kind of business under the head intra-head adjustments. So this loss from chemical business can be set off against profit from the trading of laptops. Number three. Number three is very important. So the whole chapter is very important, I will call it. Now, third one, loss from non-speculative business. Loss from non-speculative business can be set off against can be set off against loss against profit from speculative business. So this is normal business. This one is a normal business. He was normally doing the business, and the business eventually, unfortunately, sustained a loss of 20 lakh rupees, which is non-speculative. So 20 lakh rupees was the loss from the non-speculative business or normal business. But on the same in the same year, sorry, there was a profit from speculative business. For example, I told you he sold shares in the morning and purchased in the evening, and thereby he made a profit of 10 lakh rupees. So, in this case, this 20 lakh rupees of loss of a non-speculative business or regular business or normal business can be set off against profits of similar business, that is speculative business or non-speculative business, as already told. Next one, the fourth one. The fourth one states that loss from speculative business can be set off against profit from speculative business only. So already this was an exception I told. For example, uh, he sold shares in the morning and purchased in the evening, and this is a intraday, and there is no delivery of goods, and he sustained a loss of 10 lakh rupees. On the other day, sometime later, he went to again to the broker, placed an order. He purchased Infosys shares and bought in the morning and sold in the evening, and he made a profit of 20 lakh rupees. So one speculative loss and one speculative gain. The speculative loss can be set off against this speculative business profit, and eventually he has to pay income tax on the short-term capital gain at the rate of or whatsoever is the transaction. So this is a case of business, sorry. He has to pay whatever is the pertinent tax rate. Next one, the fifth one, if I am correct, loss of specified business, loss of a specified business can be set off against any specified business only. So if it's a specified business as mentioned under Income Tax Act, and there is a loss from that specified business, it can be set off against profit of specified business only. Specified business only. So I'm emphasizing on the word only, only, and only. So you should not look at other source of income. Next one, long-term capital loss. Long-term capital loss can be set off against long-term capital gain only. You can use the word only, and you should not. So this is the, we'll see. Okay. So long-term capital gain, sorry, long-term capital loss. If there is a long-term capital loss, it can be set off against long-term capital gain only. So if, for example, a house property was purchased and sold, and the long-term capital loss was some 50 lakh rupees, in the similar year, he purchased another, he sold another house property, and he made a profit of some 70 lakh rupees. So this 70 lakh rupees can be used to set off this loss of 50 lakh rupees. So long-term capital loss can be set off against long-term capital gain. Next one. Now let's talk about short-term capital loss. Let's talk about short-term capital loss. Short-term capital loss can be set off against short-term capital gain as well as long-term capital gain also, which will be shown in the next slide. So if there is short-term capital loss in a particular in that financial year, and at the same time there is a short-term capital gain also, this short-term capital loss can be set off against short-term capital gain. For example, this guy has the habit of going into stock market, and he does a intraday trading, and the total loss was 5 lakh rupees in the financial year. Short-term capital loss. Within 12 months, he's selling. At the same time, there were some transactions, and this transaction fetched him a profit of some 6 lakh rupees. And the profit is short-term capital gain. So, sale of shares is an example of within 12 months, if you're selling the shares acquired by you, then there can be a short-term capital gain or a loss. So, short-term capital loss can be set off against short-term capital gain. Next one. Short-term capital loss can be set off against a long-term capital gain also. Hope you please take a very serious note of this particular point. Short-term capital loss. For example, he goes for intraday trading. Sorry, he purchases on 1/10/2019 some shares and sold on 12/2/2019. So which is sold within, sorry, 2020, within 12 months he has sold from the date of acquisition of 1/10/2019, and thereby he made a loss of 15 lakh rupees from sale of shares for on short term basis. Now long term, he has an asset which is building. This building was purchased some 20 years back. Now he sold this building in this current year, and he sold it for some consideration, and this transaction fetched him a long-term capital gain of some 50 lakh rupees. So this particular thing tells that short-term capital loss of 15 lakh rupees can be set off against long-term capital gain of 50 lakh rupees. So 50 lakhs can is there as a profit, long-term capital gain, and the loss sort of short-term capital loss 15 lakh rupees can be set off against this 50 lakh rupees. So eventually the amount, the balance is 35 lakh rupees of long-term capital gain. Next one. So short-term capital loss can be set off against short-term capital gain as well as long-term capital gain. Already I discussed about it. Now the most important point, and the now let's look about uh, losses from the last source of our income, that is income from other source losses. So there are primarily five sources of income, as you already discussed: income from salary income, sorry, house property income, profits and gains from business or profession, uh, capital gains, and the last head of the income is income from other source. So already I told there can be income from other, there can be losses from income from other source. For example, I told you loss of owning and maintaining of horse races, there can be a loss. So that kind of loss can be set off against, that can be set off against similar kind of business activity, which is a business activity of owning and maintaining of horse races. Okay, so let's see this particular point under the head income from other source. If there is a loss, set off can be done. This loss can be against set off against income, but not income from winning from lotteries, crossword puzzles, and income from, if there is any income from activity of maintaining and maintaining, owning and maintaining of our resources. What it means that, for example, somebody has taken a loan for purchase of shares. Somebody has made a investment in stock market by purchasing shares, by borrowing that money from banker, and the banker is charging interest of some 6 lakh, some 60,000 rupees. This is one part of the discussion. The other part is, now this guy has invested after borrowing this amount from the bank, on which he is paying 60,000 rupees into stock market. In the stock market, he has invested in some blue chip companies and other mid cap companies, and they paid him a dividend of, for example, 40,000 rupees. So this is income from other source, or this is a loss from other source. This loss can be set off against the income from other source under dividend, but this can't be set. This amount of 60,000 rupees cannot be set off against winnings from lotteries, crossword puzzles, or card games, or any similar type of transactions. And even you can't set off this 60,000 rupees, even though it can be you can't set off against income from the activity of maintaining and owning of horse races. Hope you have cleared it. Last but not the least, the most important point: loss from the activity of maintaining of horse races, sorry, can be set off maintaining can be set off against similar source of income. For example, I told you Kolkata, Bombay, and Hyderabad. These two transactions, there was a profit of 70 lakh rupees. But from Bangalore, for example, in the other place, there was a loss of 20 lakh rupees. This loss of 20 lakh rupees from similar business of this one, that is income from the loss from the activity of maintaining a horse races, can be set off against similar kind of business income, that is profit from activity of maintaining and owning of horses. So so the intra-head adjustments are explained to you in parts. Hope you have understood it. Now let's talk about inter-head adjustments, or different sources of income adjustments. So, general rule. What is the general rule? The general rule says that where the net result of a competition made for the assessment year in respect of any head of income is a loss, the same can be set off against income from other heads. So what does it mean? It means that, for example, let's take a small example and I will explain. Where the net result of competition made for assessment year in respect of any head of income is a loss. For example, there is a loss from house property of, for example, 2 lakh rupees. Okay, the same can be set off against the income from other heads. So other heads, for example, business. normal business. And normal business, there is a profit of 5 lakh rupees. So these are two different sources of income. One is house property income, and one is non-speculative business or normal business profit. So under interhead adjustments, there are provisions wherein you can adjust or set off loss from one source of income against loss profits of other source of income as given in the example. So loss from one head, that is for example house property, can be set off against profits or gains from or income from other heads, for example non-speculative business example. So this is the meaning of inter-head adjustments or incomes from other heads. But there are certain exceptions, as we had similar kind of exceptions in case of intra-head adjustments. So let's take one by one. Let's take one by one. The first exception to inter-head adjustments is loss under the head capital gains. The first exceptions under interhead adjustments are loss under the head capital gains. Loss under the head capital gains can be set off against income under the head capital gains only. So, for example, uh, Mr. A is there and he sold a house property, and this house property there was a long term capital loss of some 50 lakh rupees. Okay, this is one part of our example. Loss under the head capital gains can be set off against income under the head capital gains only. Loss under the head capital gains cannot be set off against income under any other head. Okay, so loss of this 1 lakh, 50 lakh rupees, that is long term capital loss, can be set off against long term capital gain only. But you should not look at business profits or income from salary or income from house property for the purpose of setting off this one. So you can't set off this one. You are not allowed to set off this capital assets loss, sale from capital asset if there is a loss. You can't go to any other source of income for adjusting it or setting off, but rather you should look at the similar kind of source and set off against that source only. So as I already told, long-term capital gain can be set off against long-term capital loss can be set off against long-term capital gain only, and short-term capital loss can be set off against short-term capital gain or short long-term capital gain, and this can't be set off any these two cannot be set off at any cost under any other source of income. So hope you have understood this part. Next one. The next part of our discussion is exception number two. Exception number two. Let's look at the exception number two. Now, what does this exception number two states? The exception number two states that loss under the head profits and gains from business or profession. So, these particular adjustments in exceptions under interhead adjustment or similar source set off or adjustments are pertaining to loss under the head cap profits or gains from business or profession. Loss from the loss from the head loss from the head uh, loss under the head profits and gains from business or profession can be set off against any income from can be set off against income from any head of income except income from salary. So if there is a loss, for example, you are doing uh, business, and You sustained a loss of some 5 lakh rupees. So you can set off against business income or speculative business income or specified business income, income from house property, long-term capital gain, short-term capital gain. But you should not look at setting. You should not try to set off against salary income. The rule is simple that you are encouraged to do job, do service, but not encouraged to do a business. So business loss cannot be set off against salary income. For example, Mr. A is there. He is doing a job in the morning hours, um, 8 to 4 p.m. and his salary is 10 lakh rupees. Now this guy is very greedy and he does business also from 4 to 10 p.m. And in this process during the year, he sustained a loss of some 20 lakh rupees. So there is loss from business, there is an income from salary. So this salary cannot be a means of setting off this loss. That is the meaning of this particular sentence. Next one, the most important point. This point states that if there is a loss from if there is a loss from or under the heading house property, this house property loss under the head profits and gains. Sorry, this is not the case. Please, this is loss under the head house property. Loss under the head of income house property. If there is a loss from house property because it can be self-occupied. In case of self-occupied house property, please remember GAV is nil, municipal taxes are zero, and NAV is zero. And under section D, section 24(1), standard deduction on NAV is zero, and under section 24(2), interest paid on the loan taken for the purpose of construction or acquisition of the house property and subject to some conditions, the maximum ceiling is 2 lakh rupees. This was comprehensively discussed under the head income from house property. So 0 minus 0 will be 2 lakh rupees loss. So the maximum loss which can be set off under the head income from under the head income from house property and loss is 2 lakh rupees. So the maximum amount which can be set off is 2 lakh rupees. More than that it is not allowed. Next one, some exceptions to Intra-Head Adjustments. 4, this is the fourth category of exceptions under Inter-Head Adjustments. Under Inter-Head Adjustments, what are those? Since Inter-Head adjustment is not permitted in the following cases, thus inter-head adjustment is also not permitted. Since intra-head adjustments are not permitted, obviously inter-head adjustments also are not permitted. Loss from a speculative business can be set off against loss from sorry profits or gains or income from speculative business. So they can't be set off against any other than the one I have just now mentioned. Loss from specified business can be set off against profits or gains or income from specified business, and you should not go for any other set off. Loss from activity of owning and maintaining of horse races can be set off against profits or gains or incomes from similar kind of activity of owning and maintaining of horse races. Loss of lottery or crossword puzzles or card games can be set off against profits or gains from similar kind of business, similar kind of income, that is loss of winnings from lottery, crossword puzzles, or card games. Hope you have understood this part. Now, points to remember. There are certain points to remember. Please keep an eye on all these things. The points are as follows. Loss from an head other than capital gain and profits and gains from business or profession. Please remember this is very important. Other than capital gain, loss from an head other than capital gain and gains from business can be set off against income from any head of income, including capital gain and salary in the same assessment year. In the same assessment year. Next one, SSC may choose to set off the losses in the manner which is beneficial to him. It's not mandatory to set off if eligible income is less than that. So let's look at these points with some more in-depth analysis. With some more in-depth analysis, let's see inter-head adjustments or adjustments under the same source of income. Loss under the head capital gains can be set off against income under the head capital gains only. Number one. So long-term capital loss can be set off against long-term capital gain, or short-term capital loss can be set off against short-term capital gain, or short-term capital long-term capital gain, and not you should not look at any other income for setting off. Hope you have understood it. Now let's talk about loss under the head capital loss under the head profits and gains from business or profession. Loss under the head profits or gains from business. Loss under the head profits and gains from the business can be set off against any income from any head of income except from income from salary. So if you do business, you can set off against any source except some exceptions, and one more exception is you can't set off this loss from business against income from salary. Hope you have understood it. Loss under the head house property can be set off against income from any head, that is income from business or income from speculative business or non-speculative business, or specified business, or capital gains, short-term or long-term capital gains with specified conditions, and it can be set off to the tune of rupees maximum ceiling of rupees 2 lakhs only. Hope you understood it. Next one is loss from salary, not possible. So there can be salary income and there is no scope for salary loss. So salary in loss cannot be set off because there is no scope for salary income. Next one, most important one, please pay attention. Loss from loss from house property. So as I told you that when you are letting out or self-occupied, if there is a self-occupied house property, there can be a maximum loss of 2 lakhs. And when you are letting out, if the rent is low in comparison with your expenditures which are allowed under municipal taxes, under standard deduction of 30% on NAV and interest under section 24, there can be a chance for loss from house property. This loss can be set off against, look at this very carefully, this loss can be set off against income from salary. This loss from house property can be set off against profits from speculative business. This loss can be set off against profits of non-speculative business. This loss from house property can be set off against income from short-term capital gains. This loss can be set off against long-term capital gain, and similar lines, income from other sources except winnings, lotteries, and crossword puzzles. Next one, loss from business. Loss from business. If there is a loss from business, so here the heading I by mistake wrote as typed as loss from business host property, you can change it to business. Loss from business can be set off against, you can't set off against salary income, but you can set off against short-term capital gain, long-term capital gain, and income from house property, and income from other source, except uh, winnings from lotteries and crossword puzzles. So, hope you have understood this particular topic. And in the next session, we are going to take up some numerical examples to understand in detail about these concepts revolving and rotating around set off and carry forward of losses. Thank you so much for patience listening and eager to join you in the next session. Until such time, I pray for your good health and keep smiling and enjoy life. Thank you so much. Bye bye and take care.